Welcome to Bears in Exile. Today is Monday, November the 7th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, and whatever else we normally look at. Okay, well, today we started off real strong to the downside. We were looking for that, and before you knew it, boom, the bulls came back and once again throwing everything for a loop as usual. Ended up above the 200-day moving average. We were looking for a solid break below it. We did have it in the morning, and it was defeated by the end of the day in a rather spectacular fashion, actually. Uh, Also ending with another hammer. It's two hammers in a row on the Dow. Um, we have the middle Bollinger Band still crossing over in the short-term moving averages. Not quite at the middle point, but it is making progress. So, very interesting. All the short-term moving averages still pointing up, of course, which does jive with what happened today. We did get a slightly higher high than the previous couple of days. Does that mean that we're going to go and challenge this previous peak? Yeah, it's entirely possible. That would be another test of the upper price consensus level. And, it's fine if it wants to do that. We had a slight uptick in the CCI in both the stochastics. We're still waiting for the hook on the 14-day RSI moving average at its low today. It was looking pretty good for it completely leveling out, but of course, by the end of the day, that was dashed. So, really, still pointing up. Slight downtick on the RSI, slight uptick on the MACD, and a side tick on the histogram. And I blew that way up just to be sure, and yeah, it's a side tick. So, good day for the bulls once again. They had some Euro rumors about the IMF guy going to be the president of Greece. I'm kind of curious how someone who's part of the IMF all of a sudden becomes the Greek prime minister, but it just seems kind of strange to me. But regardless, NDEs are NDEs, and that's what happened today. Looking at the 60-minute, maybe we'll have some divergences. We haven't been looking for this quite so much since we have a little bit of a higher high. I figured we'd check once again. And we do not have divergence in the CCI. We do have divergence in the stochastics, negative divergence. We do have divergence in the RSI. We do have divergence in the MACD histogram. So there is something here. Whether that's going to be enough to turn it around tomorrow, who knows. But regardless, second hammer in a row. And above the 200-day moving average. Once again, could be anybody's game. You know, it'll really stink if we just reverse, go back below the 200-day moving average and have just some kind of little wimpy thing just barely below it tomorrow. Since we're above it, we need a big, strong green candle completely above the 200-day moving average. I don't know if we're going to have that, but who knows. SPX, second hammer in a row. You can see the short-term moving averages pushing up. You can see the middle Bollinger Band getting higher in the mix of the short-term moving averages. We are still below the 200-day moving average. We're still below the upper price consensus level. Slight, actually, side tick on the CCI, upticks on the stochastic, uptick on the 14-day RSI moving average, still waiting for the hook, and a downtick on the RSI, and a downtick on the histogram, which is kind of interesting since we did not have that on the Dow, and side tick on the MACD, looking for a bearish cross. So while the Dow looks very possibly extremely bullish, potentially, SPX does not echo that as of yet, but who knows, maybe we'll have the second coming overnight and we'll gap above the 200-day moving average and that'll be that, but who knows. Like the Dow, we have negative divergence in the, actually, you know what, we do not, because we did not get a higher high in the 60-minute time frame. So actually, scrap all of that. No divergence, negative divergence in the SPX. Now the VIX. We're kind of all over the place. At one point we had kissed 32. Things were looking really good. We had just gotten above the major price consensus level, and then it all fell to smithereens. So that was unfortunate. We do have, actually we don't, we almost have a bearish engulfing, but no, we do not. Middle Bollinger Band line still below the short-term moving averages. Very interesting. Downtick on the CCI, downtick on the stochastics. We are flattening out on the 14-day RSI moving average, waiting for the hook up. Uptick on the RSI, slight downtick on the MACD histogram, and a side tick essentially on the MACD itself. And yeah, we might as well look for positive divergences. Okay. Well, we do have slight positive divergence in the CCI. Could be broken very quickly. We do have positive divergence in the slow stochastic, but not the fast. We have positive divergence in the RSI. We have positive divergence in the MACD histogram. How about that? TNA, once again, hanging out where it's been hanging out, seems like for a while now. The short-term moving averages seem content to just hang on and collapse that bar. We do have the middle Bollinger Band below the short-term moving averages. Slight downtick on the CCI, upticks on the histogram, the 14-day RSI moving average, although that is flattening out. Downtick on the RSI, downtick on the histogram, side tick on the MACD. 60-minute looking for negative divergences. We don't have a higher high, so actually we're not going to really find anything. Kind of interesting that we do appear to be getting a hook on the 14-day RSI moving average on the 60-minute time frame. Stochastics going up to meet it. Whether or not they're going to get above it or not remains to be seen. But if we do get a hook and it starts to move down, that'll be nice for the bears, but still too early. UUP. Okay, now for some interesting stuff. We had the super ugly giant inverse hammer, followed by a proper pretty inverse hammer, followed by a wannabe inverse hammer today. You can see that the middle Bollinger Band line is below, way below the short-term moving averages on UUP. We are holding above the 200-day moving average. We did not get nearly the test of the major price consensus level like we did on Friday and Thursday, but it still keeps trying. Slight downtick on the CCI, downticks on the stochastics. Look at that, 14-day RSI moving average almost flattening out, almost. It's getting close. Slight uptick on the RSI, getting to neutral. Uptick on the histogram, uptick on the MACD. I still say as long as we're able to hold the 200-day moving average by the time this positive stuff is over, you know, the market running up, doing all its positive things, that will be extremely good for the bears. But, you know, tomorrow could be a really big update in the market. You know, who knows? And if we break that 200-day moving average, that will be a really bad sign. For the bears, that is. FXE, the euro. You can see that we broke the major price consensus level today, backed away, ended up with a spinning top. Short-term moving averages are pointing down, and we still have somewhat of a bearish formation in the long-term moving averages. It did take a lot of damage, but if we're able to hold below it, it'll be able to reassert itself. The middle Bollinger Band is above by a good stretch all of the short-term moving averages, which should give it some push to the downside, or at least aid in a push to the downside. Slight uptick in the CCI, upticks on the stochastics, 14-day RSI moving average really starting to level out. We're looking for the hook still. Side tick on the RSI, essentially at neutral, downtick on the MACD, downtick on the histogram. So it will be neat to see if the histogram is able to push us down it's entirely possible that the stochastics are going to have to go up and meet the 14-day RSI moving average and then travel down with it. But like always, the NDEs are the killer, and we're going to have to see what happens. GLD, second VIX. Look at that. Nice, nice little green candle. No tails or stubs or anything really. I guess there's a tiny, tiny stub at the bottom of it, but still not shabby at all. Have a gap. Middle Bollinger Band below the short-term moving averages. Yes, we have some wobble. Yes, we have some excessive separation. No, it is not major yet. We are going up close to the upper price or the major price consensus level of the previous month. It'll be very interesting to see if there's any reaction or slowdown at that point. CCI up, stochastics up, 14-day RSI moving average continuing its march. Uptick on the RSI, uptick on the MACD, uptick on the histogram. Very nice. Very, very, very nice. And SLV, poor man's gold. Middle Bollinger Band below the short-term moving averages. Short-term moving averages pointing up. And this is looking nice. It would be really good to have a test of the 200-day moving average and hopefully collapse this bar. We are above the upper price consensus level. Uptick on the CCI, the stochastics, the 14-day RSI moving average, the RSI, and a slight, ever so slight uptick in the MACD histogram and uptick in the MACD itself. So certainly my interpretation of gold and silver is that uncertainty is increasing, and that's great. That's good. It is not being reflected in the market, but hopefully it will be soon. But this 200-day moving average, man, is it being a magnet, just up and down, through it and through it and through it. I don't care if it goes up. I don't care if it goes down. I just want it to choose definitively one way or the other. So while I do believe it will be to the downside once the 14-day RSI moving average rolls over, we certainly could have some more up movement until it does that. So there is my take. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.